If you are retired or about to step into those golden years, I need you to lean in and listen very carefully to what I am about to tell you. Because there is a massive myth floating around out there, and it goes something like this. Susie, I am retired now. I paid off my mortgage, my kids are grown, I don't need a credit score anymore. People, stop it. That is a huge mistake, and it can cost you thousands of dollars when you are living on a fixed income. Why do you still need good credit in retirement? Because life happens. What if you decide you want to downsize into a lovely condo with lower maintenance? Guess what they check? Your credit. What if you want to lease a reliable new car so you don't have to worry about repairs on the highway? They check your credit. What if you want to switch insurance companies to get a better rate on your home or auto policy? In almost every state, insurance companies look at your credit score to set your premiums. So if your credit score takes a hit because of an error, an old forgotten medical bill, or identity theft, you are leaking money every single month, money that should be staying in your retirement account. And here is the real fear that keeps so many of you up at 3 o'clock in the morning. You look at your credit report, or maybe you don't even look at it because you are terrified of what you might find, and you see mistakes. Or you see accounts you don't recognize. Or maybe your score is lower than it should be because you haven't opened a new loan in 10 years. You want to fix it, but you think, Susie, I don't have the time, the energy, or the hundreds of dollars a month to hire some fancy credit repair company or write complicated legal letters to credit bureaus. You get overwhelmed, you feel stuck, and so you do nothing. Well, doing nothing is no longer an option. Today, we are talking about a tool that is changing the game for beginners, especially for folks who want things simple, clear, and automated. It is called Dovly. Now, what on earth is Dovly, and how does it work? I want to break this down in plain, simple English so you know exactly what it is, what it isn't, and whether it deserves a place in your financial toolkit. Dovly is an automated credit engine powered by artificial intelligence. Now, don't let that word, artificial intelligence, scare you off. All that really means is that instead of a human sitting at a desk typing out paper letters, a smart digital system looks at your credit report, spots the red flags, and works electronically to fix them. Think of Dovly as an automated financial watchdog working in the background while you go enjoy your retirement. When you sign up for Dovly, it connects safely to your credit profile. First, it acts as a credit monitor. It reviews your credit report, primarily through TransUnion, and tracks your score. If something changes, if a new balance pops up, or if a sudden inquiry hits your file, it alerts you immediately. That peace of mind alone is critical as you get older, because identity theft against seniors is at an all-time high. Second, and this is where Dovly really shines for beginners, it tackles credit repair. If there is an inaccurate negative item dragging down your score, like an incorrectly reported late payment, a duplicate collection, or an account that doesn't belong to you, Dovly's system flags it automatically. Then, it drafts and submits disputes directly to the credit bureau on your behalf. You don't have to write letters, you don't have to buy stamps, and you don't have to spend hours on hold waiting for a customer service representative who doesn't care about your situation. Third, Dovly helps you build credit. You see, a lot of retirees fall into what we call a thin credit file. You paid off your mortgage 15 years ago, you pay for everything with your debit card, and suddenly the credit bureaus act like you don't exist. Dovly offers credit-building features, like adding positive trade lines or reporting recurring bills like utilities and rent, so you can build a strong, active history without going into debt. Never go into debt just to build a credit score. Now, let's talk about the cost, because you know I am going to ask, can you afford it? Here is what I love about Dovly for beginners. They have a 100% free plan. You do not even have to put in a credit card. On the free tier, Dovly gives you basic credit score tracking and lets you run automated disputes on your TransUnion report. That means if you just want to test the waters, clean up basic errors, and see if your score goes up without spending a single dime of your retirement savings, you can do that. If you want more robust protection, like daily monitoring, unlimited disputes across credit bureaus, credit-building trade lines, and identity theft insurance, they have a premium plan. It costs around $39 a month, or roughly $100 if you pay annually, which breaks down to under $9 a month. Compared to traditional credit repair companies that charge upwards of $100 to $200 every single month with setup fees, Dovely is a fraction of the cost. But listen to me very carefully. I want to give you a reality check because I will always stand in truth with you. Dovely is a tool, not a magic wand. Dovely cannot remove accurate, legitimate negative information from your credit report. If you missed a credit card payment 6 months ago and the bank reported it correctly, no app on earth can legally wave a magic wand and erase it overnight. Anyone who promises you that is lying to you. What Dovely does is challenge errors, outdated marks, unverified accounts, and incorrect reporting, which happens far more often than you think. Studies show that 1 in 5 credit reports contains a material error. So, what is your actionable takeaway today? What are you going to do right now when this video finishes? Number 1. Stop avoiding your credit score. Facing your finances is the first step toward true financial freedom and peace of mind. Number 2. Go check out Dovely's free tier. You have nothing to lose. Sign up, let it scan your TransUnion credit report, and see if there are errors dragging down your score. If there are, let the system go to work disputing them for you. Number 3. Keep your credit healthy. Protect your identity, and hold on to your hard-earned money. You worked your entire life to reach retirement. Don't let credit report errors or high insurance rates steal your joy or your financial security. You can do this. Take control of your credit today.